Good morning, good afternoon, good day. Welcome to my live market meeting, 17th February 2021. I am Sakan Nandi. I used to work in IT, swing trading stocks now using the Q systems and techniques that I developed. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website, YouTube channel, and Twitter page. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q system components I use in my live trading. They are based on these underlying platforms and data sources. I will use the same systems in today's analysis as well. That was the last slide. Let's continue with the live system. Starting with the global market review, looking at AXJO Australian Index using Q Global running on Metastock platform. I am using the standard weekly, daily at a glance template. In past several webinars, I mentioned that the weekly was moving inside a megaphone pattern that is continuing. It displayed a bearish headwind signal 1 week ago. This week so far, the shape is indecisive. Price is close to the upper boundary level, not a point to take long trades. It is bullish, however, overbought. Next is Japan's Topix Index. Topix Index is stronger than Australian market. It went up for 3 successive weeks now, though this week's shape is indecisive. Today we have a doji candle in the daily chart. Price is overbought for many days. Bullish, but extended to the upside. The buying opportunities were at the swing low. Q traders avoid buying when price is already overbought. Next is China CSI 300 index. Here the last candle is still as of 10th February. The China market is closed due to Chinese New Year. We have no additional information from the China market since 10th February. As of 10th February, it is bullish. UK market FTSE index. In the weekly, it is right at the trendline resistance. That is not a point to take new long trades. Also, daily is close to the upper boundary level. If you remember my last webinar, which was on this day, I mentioned that that was the day to look for buying opportunities in the UK market. That was very effective because after that price went up, came close to the upper boundary, that is in the index. If you bought fundamentally strong stocks giving Q long setup on this day, I think they would have hit the upper boundary by today and you could book the profit in the swing trades. That is how Q traders like me and others like to buy at the swing low when the signals come on the Q charts. We avoid buying when price is already near the upper boundary level. Lastly, we study the Nifty 50 of India. The weekly has a bearish shape candle now. The week is not over yet. The backdrop color is still bullish. Daily came to the upper boundary and displayed a bull release signal. Sorry, not bull release, displayed a bear release signal, red color. In individual stocks, if you now have a reversal trade setup like headwind reversal setup or box reversal setup, bearish side, then you might look for those trades. Those would be very low risk shorting opportunities now. And you take them in fundamentally weak stocks in weak industries, giving reversal setup on Q charts. On Nifty 50 itself, we don't have any short trade setup. It is still in an uptrend. That is okay. Reversal trades are supposed to be taken in an uptrend. The global markets are bullish overall. Let's look at the USA market. For that, I'm going to use Q Elite running on TradeStation. Starting with the S&P 500 index SPY, the weekly backdrop is still bullish. Daily displayed a bearish headwind. That is a reason to be cautious and protect profit in existing long positions. QQQ. This also displayed a bearish headwind yesterday, and 3 days ago it displayed another bearish headwind. That is again a reason to be cautious and protect profit in existing long positions. DIA, there is no bearish headwind. The weekly backdrop is still bullish. Daily has an indecisive shape candle, neutral color candle. DIA is underperforming the market, shown by the relative performance tilting down. Russell 2000 ETF IWM. In the weekly, we have a bearish headwind here. In the daily, after this gap up day for 1, 2, 3, 4, 5, 6 days, it is not able to go up, not able to go down also. Overall, the market ETFs are still bullish. However, as of yesterday's close, 2 of the 4 market ETFs has displayed daily bearish headwind and 1 IWM has displayed a weekly bearish headwind. Looking at the bearish headwinds, one would be cautious and avoid taking new long trades now, unless the industry is moving opposite to the market. That we can find out from QH. Overall, the market is still bullish. We may start looking for reversal trades, bearish side. Let's look at the sector industry rotation picture now. The very useful 1 month to 1 day sector advance decline, industry advance decline, and stock advance decline. As we go from longer period to yesterday, we see that it is gradually becoming less bullish. Yesterday, 73% sectors were down, 59% of industries were down, stocks were more balanced, 52% of stocks were down. Yesterday was overall bearish. Over 2-day period, it was balanced, and before that it was bullish. So we can see a gradual transition from bullish to bearish picture. That is another reason to be cautious. If we see which sectors went up and which sectors went down yesterday, 3 only went up, 8 went down. Which 3 went up? Energy, financials and materials went up by a small percentage. The sectors that went down, out of them, consumer discretionary, consumer staples, healthcare, these 3 went down by bigger percentages, followed by real estate and utilities and others. As you can see, both defensive sectors like real estate, utilities, consumer staples, as well as non-defensive sectors like consumer discretionary, healthcare, infotech, they went down yesterday. It was a mixed picture. Defensive as well as non-defensive sectors went down. Financials went up. Energy went up by a big percentage. If we take a step backward, looking at a longer term period, over 5 days, 7 sectors are up, 4 down. Over 10 days, 11 up, no sector is down. Over 1 month, 10 sector is up, 1 is down. Over 1 month period, the sectors are remaining bullish for many weeks now. And this stepping back picture is overall bullish. However, our trading decisions are made on today's date for swing trading, and that picture is telling us to be cautious based on this overall sector, industry, stock breadth transition from very bullish picture to mixed to bearish picture yesterday. What about technical breadth? That shows the balance between bullish and bearish technical signals, first using the weekly picture, and very clearly you can see how the reversal signals are becoming more and more bearish. I have been showing this over several weeks now and pointing to the fact that the reversal signals are more bearish for several webinars now, though overall all signals are bullish. And as of today, 89% of reversal signals are bearish. This percentage is gradually going up. And as I mentioned, I am maintaining the same view. If the market rolls over, these stocks are going to give lucrative shorting opportunities. Overall, the picture is still bullish. 57% of stocks signals are bullish. If we look at strength signals, 91% bullish, trend continuation 58% bullish, reversals 89% bearish. That is the weekly picture, and I always keep an eye on the number of bearish headwind signals at the market top, 132. Bullish headwind 0. Also box signals that indicate double top or double bottom, in this case weekly period, 13 box signals, possible reversal setup, bearish side, only one bullish side. These two are worth noting, the large number of bearish headwinds and lesser but relatively large number of bearish box setups in weekly period. If the market rolls over, this may give low risk shorting opportunities. What about yesterday's picture? Overall, it is slightly more bullish than bearish, 57% bullish. However, here also, using the daily interval, reversal signals are very bearish. 81% of reversal signals are bearish. Again, if the market rolls over, this may give lucrative shorting opportunities. Overall, though, we have to say both the daily and the weekly period is still more bullish than bearish. That is the objective way of looking at things. Q systems are largely unambiguous, and we have to say using Q finder that technical breadth is also bullish. Global markets are bullish. USA market ETFs are bullish. USA sector industry stock breadth is bearish as of yesterday. Before that it was bullish. Technical breadth is overall bullish, including yesterday. That seems to paint a bullish picture, no doubt about that. Sometimes the weakness is not shown by the market ETFs. They are shown by market internals first. Let's look at the market internals. First, looking at the mega cap top 20 custom index. When mega cap top 20 went up to the upper boundary, I mentioned in the webinar that even if I could trade it as a stock, I would not buy it at that point, because Q traders don't like to buy at upper boundary level. That would be very useful decision, because since then price could not go up. Didn't come down also, just moving sideways. The weekly is displaying 3 successive candles with upper tail. There is no short setup, but it is possible that price will roll over from here. Over the last few days, the relative performance is showing that mega cap index, mega caps overall, they are underperforming the market, and mega caps are overbought, as is the market, shown by the stretch band indicator. Now let's look at the movement of stocks relative to their moving averages using the major indices. I'm using daily interval here. Looking at the 4 major indices, Dow Jones, Nasdaq 100, S&P 1500 and S&P 500. For the daily interval, I'm focusing on the percentage MA calculations. For Dow Jones, percentage of stocks where 50 MA above 200 MA is remaining bullish above the average line, which is the white thin line. The same is true for Nasdaq 100, S&P 1500 also. S&P 500 just about to roll over. If we look at the percentage of stocks above 50 MA for Dow Jones, it rolled over, now it recovered, and as of yesterday went above the average line. Nasdaq 100 rolled over, recovered, but could not go to the average line, rolled over again. That is showing in this respect at least, Nasdaq 100 is weaker than Dow Jones as of yesterday. S&P 1500 rolled over, recovered, went above the average line but rolled over again, similar to Nasdaq 100. S&P 500 rolled over, tried to recover, could not quite reach the average line and rolled over again. The several indices where percentage of MA above 50, the number of indices, that is Nasdaq, S&P 1500, S&P 500. These 3 indices, percentage of stocks above 50 MA rolled over again after trying to go up. They are now below the average line, that is showing some weakness. When it first rolls over, we expect that these plots will try to recover, and if they cannot recover above the average line or barely recovers above the average line and rolls over again, that shows that market is showing weakness. It is like creating lower high and lower low. This is an aggregate picture. Relatively speaking, as of yesterday's close, Dow Jones is slightly more bullish. If we look at the third percentage MA plot, percentage of stocks above 200 MA for Dow Jones rolled over, could not go to the average line, rolled over again. Nasdaq rolled over, now came down further. S&P 1500 rolled over, recovered, rolling over again. S&P 500 rolled over, could not quite recover to the average line, rolled over again. So both of these percentage MA calculations are showing weakness. Percentage of stocks above 50 MA, percentage of stocks above 200 MA. Percentage of stocks where 50 MA above 200 MA is not showing weakness yet, but that is normal. That is involving calculation of two moving averages. That is a slow calculation, slower relative to the other two. So this top breadth calculation that will roll over later. Percentage of stocks above 50 MA is expected to roll over first, followed by percentage of stocks above 200 MA, and they are starting to roll over for the second time. Let's look at the internals now from new high-low advanced decline up-down volume perspective. For that, I am going to use the weekly interval. New high-low advanced decline up-down volume for the same four major indices. Same four major indices: Dow Jones, Nasdaq, 100, S&P 1500, S&P 500. Advanced decline is continuing to show weakness. The peaks are becoming lower, troughs are becoming deeper. The same is true for up-down volume also. These two internals tend to show market weakness before the weakness is reflected in the market ETFs or futures, because this is a broad study looking into the market's internals. That is showing clear weakness. Market may not immediately roll over, but when you see weakness in advanced decline up-down volume, they are rolling over while market is making new all-time high. That is time to be cautious. Also, as I showed in the last webinar, S&P 1500 was red hot both in terms of thrust and jump. S&P 500 was also red hot both in terms of thrust and jump in the weekly interval. And if you looked at Russell 2000 IWM, that was also red hot in the weekly interval both for thrust and jump. Therefore, though looking at the indices market is bullish, there are several cautionary signals. Let's list them. Which are they? What are they? They are, first of all, number of bearish headwinds coming in market ETFs. 3 out of the 4 market ETFs have displayed bearish headwind, either in daily or in weekly. Second caution, the percentage MA calculations for 50 MA and 200 MA are showing weakness. The plots are rolling over below average line for the second time. Third weakness, 3 market ETFs are showing red hot condition, over stretched condition in terms of thrust and jump calculation. They are Russell 2000, S&P 500, S&P 1500. And fourthly, the advanced decline and up-down volume for the major indices are rolling over. That is enough reason to be cautious. When will we start to look for shorting opportunities? We will take them more confidently when the market ETFs or futures are giving a short trade setup. Even before that, we may start to look for shorting opportunities in individual stocks that are weak fundamentally and in weak industries. However, when the market ETFs or market futures start to give short setup, then we'll probably completely avoid or largely avoid taking long trades and start to look for short trades. We don't have those bearish setups yet in the market futures or ETFs, but individual stocks may have them. Let's look at some stocks now. Before looking at stocks, let me explain one enhancement that was made. If you look on my Twitter page, twitter.com/sagarnandi, I made this announcement today just a while ago. There is an incremental release for Q Elite for Trace Station 10, the latest update 922. This is an incremental release. What does it include? It has now a workspace with sonar or radar that enables you to check weekly backdrop and daily go with flow on a single workspace. And it also includes the enhanced Q intraday market breadth for 6 indices. This I released a few days ago. I put a message on Twitter about that, about the market breadth for 6 indices. If you had not downloaded it at that time, you may do that. Both of these are included in the incremental release. Let me demonstrate these two features now. Q Elite already had the intraday market breadth. Now I have expanded it further to include the two composites which were already there, and now expanded that to include the 4 major indices: Russell 2000, Dow Jones Industrials, Nasdaq 100 and S&P 500. We already had for Nasdaq and NYSE composites the tick, advanced decline and up down volume. Now during the day, intraday, in real time, we are able to observe the same for the 4 major indices also. How to use them? If you are going to take a long trade, you have already planned for a long trade, you may keep an eye on these 6 indices internals. If all the internals are bullish, then you are more confident to pursue your long trade. However, if all the internals are bearish for the day, you may wait for taking the long trades instead. If you had planned for some short trades also, you may focus on the short trades if the internals are bearish. Other than the internals, you will of course look at the 4 major market ETFs, or you could use the future symbols here. Here I am using the market ETFs. You could use the futures also. You would also look at how the market ETFs or futures are moving relative to the Q intraday pivot levels. That will also give an idea how is the open is bullish or bearish, and equally importantly, after open, is it bearish or bullish overall. That picture you will get from the 4 major ETFs or futures. You will combine that with the internal to see whether really internally the market is bullish or bearish. If all of them are aligned and you see a bullish picture, you are able to take long trades with much more confidence. If all of them are aligned and they are showing a bearish picture, you are very confidently able to take short trades. If they are showing a mixed picture, then you may be cautious. These 6 indices intraday market breadth workspace is available in the incremental release. The other thing that I included is a weekly backdrop calculation for stocks. I did that based on input from one of the Q traders. Let's explain it. Earlier, what I used to do, or Q traders used to do, and it was not difficult. Suppose we are looking for Q trade setups on a symbol list. Let me drop the Dow Jones Industrial Average symbol list here. Remove the index, remove the header line. Q Elite's sonar on TradeStation calculates multiple signals in real time. Some of them are trade setups like breakout, bounce, headwind, box, go with flow. The trade setups are with full capital in header. And then there are other signals like gap, change from open, change from close, false move, touch, U-turn, pressure, activity, etc. You could use this sonar in real time to see if any stock is giving breakout setup, red or magenta are bearish, green cyan bullish. So we have multiple bearish breakouts yesterday, multiple bullish breakouts. You could look for trend following trade setups, that is go with flow setup. And you could look for box sideways market trade setup. There was none yesterday from this list, and headwind reversal setup, bounce exhaustion setup. There was no headwind, box or bounce setup yesterday. Now these calculations are based on the daily interval. TradeStation's radar allows calculation on only one interval at a time. Now go with flow or bounce or headwind, these trades setups have checklists. Let's look at the checklist. You may access the checklist using this checklist icon on my website sagarnandy.com. If we go through the checklist for go with flow trend following trade setup, you probably know already there are number of unambiguous requirements, unambiguous checklist conditions on daily, and one checklist condition on weekly as well. So what Q traders I used to do is just look at the stocks giving go with flow trend following long setup. Let's say Boeing, BA. Link the symbol. BA is giving a possible go with flow long setup on the daily interval. Then we used to look at it using the chart, weekly, daily at a glance template, and see if the weekly condition is also being met. In this case, the weekly condition is also being met, daily condition is also being met. So it is giving a trend following long trade setup. Did it close above the trend line resistance? Let's look at sonar. Yes, it is giving a breakout setup also. That means it closed above the trend line resistance and it gave a trend following long trade setup. Now we used to look at the weekly checklist based on the chart. Now if you wanted, you could drop the same symbol on the left hand side, backdrop weekly interval calculation first. I remove the header line and the index itself, sorted by backdrop column. Now if we are looking for go with flow long trades, then we need to focus only on the stocks where backdrop is bullish. So you could sort by backdrop column, drag and select the stocks where weekly backdrop is bullish, copy using Ctrl C or right click copy, come to the usual daily sonar, use Ctrl V or right click and paste. Now if you have go with flow setup, using the sonar daily interval, then you know that these few stocks 1, 2, 3, 4 are not only giving possible go with flow setup in the daily, their weekly is also matching the required condition. You could do similar things for box setup also. Box setup also has a weekly requirement. So does headwind setup. So you could use this additional radar on the left hand side that only has the weekly interval backdrop calculation. You could limit the number of stocks to look at for example, go with flow long trade setup. You could of course look at these stocks using at a glance template and decide if the weekly was meeting checklist conditions. You could also use the backdrop calculation first and only select the stocks with backdrop bullish. Which one approach to use? I think if the list of stocks is small, for example, if you are using Dow Jones 30 stocks, then it may not be time efficient to look at the weekly backdrop first and then select the bullish backdrops, put them into the daily sonar. You may just drop the smaller list in daily sonar and only a handful of stocks will give go with flow setup or other setups. You may look at the charts one by one. That will not take much time. On the other hand, if your usual symbol list is 400, 500 stocks, then you may save time by looking at the backdrop calculation first. That is especially if you are using the go with flow trend following long trade setup. Now, one thing to keep in mind, if you are looking at the backdrop calculation using this sonar radar on Monday, for example, the week is not over yet. Therefore, just by looking at the weekly backdrop on Monday may not be enough. You will still have to look at the chart to make sure that the weekly is overall bullish. That is another enhancement that I made, adding the backdrop radar to the sonar workspace. You may download it from the incremental patch from Dropbox link that I gave on the Twitter post. Let me spend some time on the calculations here in the daily radar. As you know, the full capital headers are for trade setups. Sometimes people may ignore the other ones like high pressure or high activity, but I have found it to be worth looking at the stocks with high pressure or high activity, especially those which are also going up with large percentage change or going down with large percentage change, shown by the change plus minus positive or negative change with respect to previous day's close, this column. Or you could also look at the gap plus change from previous close and pressure or activity columns together. Sometimes they give very interesting trade setups. What are these setups you may look for? This is the pattern. Suppose a stock is moving inside a very narrow range, maybe with a number of doji-like candles, and then it shoots up with a very bullish shape candle like this. So it was moving inside a narrow range, then it shoots up with a bullish shape candle. Often that movement is associated with high activity. Sometimes it is also associated with a gap up open. When an instrument is moving inside a narrow range and shoots up from there with high activity or pressure, often associated with a gap, that may be the beginning of a prolonged uptrend. Now this range may sometimes be very narrow, sometimes not so narrow. It may be just a sideways range. Let me show two examples. One example from another country, but that doesn't matter. The technique is applicable to all the markets. This is a live example that I shared with some of the India traders. One of the diversified banks. We saw that in America also financial sector is strong as of yesterday, and that was true for India or maybe other global markets also. But look at this stock showing the pattern that I described just now. It was moving inside a narrow range. Then we had a gap up, large bullish candle that broke out of the range with heavy pressure, very high volume. That was Tuesday. And today it went up sharply again. So this kind of moves rapidly going up, often with or sometimes maybe without gap up, with a large bullish shape candle associated with pressure and high volume, they are something worth noting. How could you note them? If you use Finder, and let me close the USA Finder. Okay, let me not close it. I don't have to open the India Finder. In Finder Daily, you could look for stocks going up with high pressure. And maybe you could associate that with gap as well. We still have 40 stocks as of yesterday in the USA market, and some of them went up by very large percentage. This list includes low price stocks also, liquid stocks, but it includes low price stocks, medium price stocks, high price stocks, all. If you remove the low price stocks, probably the percentage changes will not be so high, but you will still, in either case, whether you are just looking at liquid stocks or mid-price liquid stocks, you will be able to identify those sudden moves with pressure and sometimes with gap with large percentage change. They often give rise to prolonged up move. You would open them using chart and see that prior to this large percentage move, were they moving in narrow ranges. And using this technique, you would be able to catch many of the stocks up moves right at the point of breakout from a narrow range. Sometimes the breakouts may come with memory trendline breakout, but sometimes there may not be any memory trendline resistance. Using the pressure, sometimes adding the gap, and then looking at the large percentage change column using these three columns, you are able to identify those sudden and sharp moves, often just at the point of the breakout. So I gave you an example from India market, live example. Even if you or somebody bought it on this day using Q Finder sometime during the day, by today they have more than 30% profit. And this is not a speculative stock. This is a large diversified bank in India, not a speculative stock. So this was possible, this large percentage profit in 2 days, because of using Finder to identify the gap also in this case, large percentage move with pressure and volume. Now let's take an example of similar move in the USA market now as of yesterday. That is X, US Steel. Exactly same pattern, it was moving inside a very narrow range. Then yesterday it sharply moved up. It had a gap up also, as I mentioned. Often but not always the moves are associated with gap up. You may first look at stocks with gap up and then relinquish the criteria to see more possible breakout from range trades. So in this case, X US Steel had a gap up, sharp up move, bullish flow, breakout from trend line resistance, very high activity. It was already above white direction line, tried to go below the yellow direction line and regained the yellow direction line yesterday. So it also gave a pullback technique buy point. Let's look at X using sonar now. I'm putting US Steel on the daily sonar. In real time, you could see that it was going up by large percentage change. As of close, it was up by 12%. It had a gap up move of 2.2%. Gap up open. From open, it went up by another 9.8%, closing 12% higher from previous day's close. It had a breakout setup, possible bullish flow, go with flow long trade setup also. How is X fundamentals? Let's see if we could use this technique to find a Q360 degrees trade setup. Technically, it gave many signals. Not only the signals that we saw from Q sonar on trade station, if I look up the finder signals, we can also see that it had a pullback. So we had a gap up, breakout, pullback, bullish flow. Using finder, we can look at this additional signal pullback. Either using finder or using sonar on trade station, you could identify the opportunity. If you looked at Q fundamental score, valuation is not good, but it has high earnings growth in the latest quarter. That allowed us to buy. Had a short squeeze potential. Yesterday, 91% of the 22 peer stocks in steel industry went up. So the industry in itself was bullish. Was it relatively strong? Let's check that out from Q edge. We saw already materials was strong. If we see steel industry, very strong over 1 day period as well as over 2 day period. 142 score, very high score. We have about 140 plus industries. Alternative industry score is also high and it is improving. If we look at percentage move of the industry over 1 day, 2 day, 5 day, that is also consistently going up. If we want to look at the industry rotation over longer period using the relative score, just looking at the color is enough. Steel industry is certainly strong and also improving. So we ended up finding a stock which is a high growth stock in the latest quarter with a short squeeze potential in a strong industry that gave a large number of buy setups yesterday. Now I remember in last one of the webinars, one gentleman asked about how to use fine-tune chart for precise entry. I explained that, but let's take this example again. Could we enter it during the day using fine-tune chart and probably book some profit yesterday? One thing is for sure that we could identify it right at market open. Why? Because firstly it had a gap up open that would show up in radar sonar. Also it had a breakout right at market open. So at market open itself we could identify this stock as a potential buying opportunity. Then if we looked at the intraday fine-tune chart, let me change the template to fine-tune template, and for morning session the suggested time interval is 5 minutes. I change to 5 minutes. Let's analyze the stock X using fine-tune chart 5 minute interval. The opening point was the blue pivot line which was above green pivot, that is previous day's high. So it had this gap up open. After that the early range high, early range low lines form. it had a gap up, it had a bullish breakout, so we are going to look for only long trades. On this 5-minute candle, it closed decisively above the early range high. That would be the point to take a long trade. For the day, the stop would be just below early range low. In this case, there was another pivot, green pivot just below that. You could put stop below this green pivot, previous day's high. And when price came to this white pause pivot, probably the risk distance was covered. It was certainly covered by the close of the day. You could comfortably book partial profit by the end of the day. The reward was much higher than the risk. That was an example of a precise entry of a swing trade where the decision was made once again using weekly daily interval. Entry was made using fine-tuned chart. It was also a gap up day trade setup. And this trade could be taken in a stock that is fundamentally strong in terms of growth, in an industry that is strong and strengthening, and you could identify it from sonar by using not the trade setup columns as such. Of course, here we also have a breakout setup and go with flow setup, but oftentimes even without the trade setups, you could use the change percentage column, sometimes the gap column, associate that with the high pressure or high activity column to find stocks that are suddenly moving out of narrow range. It could be in any market like we saw in US Steel, in America, and it could be Bank of India or other stocks in India or other global markets. I wanted to mention that because sometimes you may only be focusing on the trade setups in Q Sonar, but using pressure and percentage change, this change percentage column, you can sometimes find stocks right when they are starting to move up. We are near 1 hour point. Let me end today's session here. Last few sessions I was going slightly beyond 1 hour. No harm to close the session slightly below 1 hour today. The market is bullish, but as I mentioned, as I showed using objective data, there are 4 warning signs. One is bearish headwinds coming in multiple ETFs, and as we saw from Finder, that is coming in many individual stocks, weekly symbol. Bearish headwinds are there, internals in terms of percentage MA calculations and advanced decline up down volume, both are showing weakness. Sector industry stock breadth weakened yesterday. These are the reasons to be cautious. You may still find buying opportunities in strong industries like US Steel, probably in some financial stocks also. You may also start to consider protecting profit in long positions using trailing stop, or even start to look for shorting opportunities. Whatever the market does using Q systems, this holistic approach, market internal, sector industry breadth, technical breadth, and the Q trade setups, you are probably going to be a little bit ahead of others. And whenever I see trading opportunities, long or short, I will continue to share them on the forum and Twitter. You may keep an eye on them also. That will show you exactly which direction I am trading. Thanks a lot for joining me today. I look forward to seeing you in my next session. That will be during the weekend. I will announce the date and time on Twitter, and you will come to know if you are subscribing the YouTube channel. At this time, I like to show the thank you page. Yes, it's there. Thank you very much. Once again, have a great week, and as I always say, no reason not to do so. Trade profitably. Thank you.